priced for next year's. When you see the inflation rate bond, inflation-linked bonds, they are pricing also quite high. So I think a lot is in the prices already. It's interesting to see that the Fed has changed the narrative quite quickly and at 180 degrees, because a few months ago it was inflation is transitory, and now it's inflation is much stronger than what we expected. So I think the market has been quite quick to rebound and to price this. We don't see a deterioration for there. We think inflation will stabilize. It has been going up because the most cyclical parts of the inflation has been going up, and also because there were some events that are perhaps once in a lifetime in oil and food that could normalize next year. So we think that a lot has been priced in the market, in the yield in the US. When you look at the 10 years yield in the US, you compare it to Europe, obviously there is a spread there. And at the end, we are not so worried by the fact that inflation will continue to grow, although we were worried at the beginning of the year when everybody was saying that inflation is transitory and we were saying that inflation is not transitory. We think now that inflation is there to stay, but at the level which will be more around 3% than the 6% we see in the US currently.
Do you think there's a danger that the ECB might be forced to do more? That actually, while a lot of the inflation this year has been in the United States, more of it may be in the Eurozone next year?
I don't think they will necessarily have to do more. The progress in the German election and the organization of the government and the priorities which have been mentioned by the German government, which is generally the most hawkish about the fact that they want to invest in infrastructure, in climate transition project, etc., show that it is important for them to keep growth going, even more in Europe, where we have some social unrest and more polarization around vaccine, etc. It's important that the growth is well there before there will be some catch-up in rates. And it's interesting because although it's the US which has the dual mandate for the Fed and Europe has an inflation mandate, we could say that today the role are a bit inversed.
Yeah. Though the language at the Fed seems to be changing over the last few days, certainly post the renomination of Jay Powell to firmly focus on inflation, though the labour market has been the focus, as you say, up until then. Fiona Frick, Unigestion CEO, staying with us. Coming up, we'll talk more about the Fed. The latest Fed minutes show officials were even 3 weeks ago open to the idea of removing policy support at a faster rate, a faster taper. We'll discuss that next. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I look at the opportunity we provide
and providing access to information and knowledge, I think will end up being on the right side of history as well.
Let's check in on the Bloomberg First Word News. I'm Max Ramsey. British Prime Minister Boris Johnson has lashed out at France after a deadly boat accident in the English Channel. 27 people died when a boat filled with migrants sank. Johnson accused France of not doing enough to stop migrants trying to get to the UK from northern France. More than 25,000 people arrived in the UK this year, about 3 times as many as in 2020. The price of oil steady today after OPEC said a coordinated release of reserves may make a crude surplus next year even larger. The cartel and its allies meet next week. Some OPEC delegates warn that releasing strategic reserves may lead the alliance to hold back oil supply in January. Economists at Goldman expect the Fed to tighten monetary policy faster than expected next year. In a note to clients, Goldman said the central bank will double the pace it's withdrawing its massive asset purchasing program to $30 billion a month. The bank also forecasts that the Fed will raise interest rates from near zero in June. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Max Ramsey. This is Bloomberg. Guy.
Max, thanks very much indeed. So as Max was saying, Jan Hatzius and the team over at Goldman Sachs suggesting that a faster taper from the Fed may now be required. They're talking about $30 billion a month. In many ways, actually, there was some evidence for that argument within the latest minutes from the FOMC. Even 3 weeks ago, there was a debate about the need for a faster pace. We are now certainly seeing the data supporting that. The PCE data yesterday, very strong. Even the core number, very strong out of the United States. However, has the market already priced it? Fiona Frick, Unigestion CEO, still with it. Fiona, the economists are now pointing to a faster taper. The traders have already got there, haven't they? This is already priced.
Yeah, I think the faster taper is already in the market. The market is pricing 3 hikes next year. And inflation-linked bonds are quite expensive. So I think, yes, it is priced and perhaps priced quite aggressively. So I think what the Fed has done, it has adjusted its narrative to the level of what the market was imagining.
Do you think that's already the price for stocks, though? When do stocks start to meaningfully react to this? We've seen some wobbles in tech stocks recently, but nevertheless, you don't feel the full impact of higher rates is fully in the equity market.
I would say with rates at where they are today, with the 10-year at 1.6, equity still looks like a good deal because dividend yields are higher than that, etc. So I would say that if yields remain at their level between 1.5 and 1.8, whatever, equity prices are quite well priced. Nevertheless, there could be some technical adjustment in the next week because of the COVID crisis, etc. But the fact that there is still strong growth expected for next year, and the fact that there is inflation means that there is growth is positive for growth assets.
How do I segment that, though? We need to get a little bit more nuanced in terms of how we think about growth assets. Equities generally have done very well, but the market has got narrower and narrower. What does that tell you about kind of where we are positioned?
It's quite interesting because markets have been going up since March 2020, but there has been a huge polarization. So the first wave was technology doing extremely well and the rest of the market doing extremely poor. That was the first narrative during the COVID crisis, when really the COVID health crisis. Then the second narrative was, okay, there's going to be a rebound. And then you had cyclicals, value bets, very strong, technology going a bit down. And again, a strong polarization. So what is interesting is although the market has been going up for the last 18 months, it's not at all the same stocks that have been going up. What we see now is more of a comeback from some defensive sectors, which see that obviously there is some growth remaining. They playing catch up because there have been quite, in relative term, quite an underperformance in the last 18 months. And don't forget that technology, etc., are sectors which are sensitive to interest rates. So we see markets going up, but we would be in favor of more defensive growth quality sectors.
Yeah, it's been interesting, actually. Even the market within technology is segmenting between the kind of highly profitable companies and not so profitable companies, the interest rate impact being certainly felt in the latter group. If we are going to go more defensive, if we are going to have another look at some of the cyclicality, do we favor Europe next year over the United States?
Not necessarily. I would say that both markets are so intercorrelated. But nevertheless, I think the two things we will have to check is how is inflation going to evolve in the US compared to Europe? How is the Fed going to evolve compared to the ECB? And then how is growth going to be in the US compared to Europe? And when we have the answer to these three questions, we will be able to say if US is to favor, Europe is to favor. It's too soon to call the shots.
In terms of what could impact that decision making, what do you think happens with the dollar next year versus the euro? Because already this year, it's having a huge impact. I keep quoting this. The NASDAQ for a dollar investor is up by 22%. For a euro investor, the NASDAQ is up by 33% year to date.
We see that stabilizing. Obviously, the dollar is very linked to the comment of the Fed and the fact that the market is pricing interest rate hikes. I think so we see that stabilizing. It's the same bet. US dollar positive, interest rates in the US being quite highly priced. So I think there's going to be a stabilization from there.
Fiona, we're going to leave
and
it there.
The good news is it will make Europe more competitive also in exports.
Yeah, well, that will certainly help out. If you're an export, it's going to be interesting to see whether or not we pivot to the exporters in Europe rather than domestic stocks, which have had a much better year so far. Fiona, we're going to leave it there. Really appreciate your time today. Thank you very much indeed. Fiona Frick, Unigestion CEO. Coming up, we're going to hear from the Bundesbank's Vice President, Claudia Busch, on the central bank's financial stability review. That's next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. I'm Max Ramsey. The European Central Bank is considering whether to put limits on the riskiest parts of banks' lending to indebted companies. Bloomberg's learned that the ECB's supervisory board has discussed capping newly originated leveraged loans at a certain share of individual banks' balance sheets. There's concern there could be a blow-up in the market. Nordea Bank has retracted a controversial conspiracy-fueled research note on the coronavirus. Senior analysts at the Nordic region's largest bank referred to governments battling COVID as lockdownistas and questioned the effectiveness of vaccines. They also made a Nazi reference. Nordea Bank says the note does not reflect its official views. A new government review has a warning for English soccer. It says there will be more financial chaos unless money filters down from the Premier League more evenly to teams in the lower levels. The report says the sport is at a crossroads. Despite the wealth in the Premier League, English soccer teams have ended up in administration 62 times in the past 3 decades. And that's the latest Business Flash. Guy.
Max, thanks very much indeed. Germany's Bundesbank has warned that remarkably low numbers of business failures during COVID-19, the pandemic, shouldn't be seen as a guide for future risks. We caught up with the central bank's vice president about the latest financial stability review and the inflation risks.
What's pretty clear in all of our forecasts that there's a strong temporary component. Now, nobody knows, how long the temporary effect will be and what is the long-term evolution of inflation. Certainly, there's higher upside risks, and that's something that monetary policy has to take care of. So that's not the issue we're discussing in this report. But what we are saying is that obviously monetary policy needs to act, but we have to make sure that the financial sector can deal with future contingencies that we all don't know. And one of the things is an increase in inflation is higher interest rates. And if this increase in interest rates comes rather gradually, I think this is something that the financial sector can deal with. If the increase in interest rate comes more abruptly, then we have weaknesses in several parts of the financial sector. So, and that potential abrupt increase in interest rates certainly can also be a market increase, so risk premia can change. So this is something that we're very much aware of, and we're making sure that the financial sector, everybody manages interest rate risks very, very, very well.
And I imagine that is so hard at this point because there's this huge debate as to whether this is one-off or this is permanent, how that feeds into all of this. So how do you, of course, not getting too much into perhaps the politics of inflation, but just from a policy perspective, how are you able to prep yourself for both scenarios? Because it does seem that the debate is not settled on either.
Right, like you said, and it's probably very hard for everybody to attach probabilities to either one scenario. And what does that mean? I mean, if you can't exactly attach probabilities, that's a situation where you have a lot of uncertainty. And what's from a regulatory perspective, from a financial stability perspective, what are the measures you take if there's a lot of uncertainty? You need higher buffers in the system. You need higher buffers to absorb potential losses. And this is why we're saying this is the time now to take precautionary measures to increase in particular, the counter-cyclical capital buffer. That's a buffer that can fluctuate over the cycle. And that's the measure you have to take now in order to protect the financial system against whatever the future contingencies will be.
Of course, we're here at the German Central Bank. The president of the German Central Bank, Mr. Weidmann, is going to leave. There's so much speculation about what it means, a change in the central bank, who could be. Your name has even been floated at times. I'm not sure if you want to comment on that, but I wonder, what message do you want to send as the central bank, the faith in the institution, even if names change? Can you guarantee the solid nature of the institution? It's not so much about the person, perhaps, but what the institution stands for.
Yeah, I mean, obviously you would understand that I don't comment on these decisions. I think they're in the good hands with the politicians. I mean, what is really important is that we have a very stability-oriented culture. So the Bundesbank, I think, has an extremely important role in making sure that prices are stable. We also have, and this is why we're sitting here today, we have a very important mandate when it comes to financial stability, and we need this. So financial stability is really kind of the backbone also for price stability and for all the other policies to work as intended.
And that means, I guess, and this is always the image that the Central Bank of Germany kind of relates, that the number one focus is inflation. This is, for you, what is really your core mission, and this is where all the efforts go to maintain that price stability.
Well, take the example of climate policy. So I think for all the climate policies to work, we need stable prices, because in the end, what these climate policies and CO2 prices try is to change relative prices and to steer the economy toward a greener production of goods and services. And so for that to happen, we need stable prices. So this is why it's always important, but it's even more important in these days.
So whoever gets it, and of course, let's not speculate, but whoever gets it, that's still very much the message the German central bank says is price stability that really should be front and center. Really.
Yeah, absolutely.
Bundesbank's Vice President Claudia Busch speaking to Bloomberg's Maria today, a little bit earlier on today, on that financial stability report. We've got, 5 minutes to go until the end of trading here in Europe. We are seeing light volumes, understandably, with the United States out for Thanksgiving and their markets closed. But there's some interesting stock stories that I think are certainly worth digging into here in Europe as we approach the close. Let me just highlight a couple of them. Rémy Cointreau out with a really solid set of numbers. It appears that high-end liquor is certainly in demand at the moment. Cocktails are back, apparently. Cointreau in hot demand over in the United States. Rémy up by 13.32% as we come through into the end of the day. RVA having a very solid session. Electa having a solid session. Vestas having a good day as well. Bottom end of the market, there are some single stocks that are actually worth focusing on there. Evolution is one, the Swedish gaming company that has been accused by rivals of violating sanction rules. Today had a conference call. The analysts seriously unimpressed. This stock is down by 15.66% today, but it is down heavily over the last few days as well. Today is just a further step forward in terms of the degradation we're seeing in the share prices. FTSE, DAX, CAC, all higher today. Yesterday we saw a bit of divergence. Today we're getting actually some fairly common performances being delivered. Yesterday the auto sector was down, dragging the DAX a little bit lower. The autos were under pressure again a little bit today, but the DAX is up by 0.2%. The FTSE 100 up by 0.3%. But the CAC 40, being led by Rémy, is the outperformer, up by 0.4%. The close is coming up next. We'll dig into the details even further then. That's next. This is Bloomberg.
An extra $1 trillion in spending, not increase inflation?
By increasing the productive capacity of this country. And that's a very important thing that we, frankly, have not successfully done across most of my lifetime. I've been waiting for this legislation for months since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future. Let me also point out to the fact that Part 2 of the President's agenda, what I like to call the big deal, but Part 2 of that, the Build Back Better Act, has even more that will help beat back inflation by lowering some of the costs that Americans feel most acutely, the cost of childcare, the cost of healthcare, the cost of housing, the cost of prescription drugs, bringing those down while also making sure that we ease some of those labor market issues we have by making it easier for working parents to afford to go back to work.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Visit Bloomberg.com/webinars.
On the supply chain, are you starting to see things improve? And if you are, where specifically, sir?
Well, this year we have been mostly affected by the semiconductor situation. And we believe that the Q3 was the quarter that was most affected.
So we're wrapping up the Thursday session here in Europe. Stocks are about to close for the day. We'll go through the auction process. We'll give you the final numbers a little bit later on in the program. But for now, let me give you the big picture story. A positive session here in Europe delivered on light volume. I keep talking about this. Let me give you an idea of the kind of volume story that we're seeing. In London, for the FTSE 100, it's down by around 45%. That's the impact that the US being out today has in terms of the volume picture. It's also Thursday, you may have noticed, and that in London means ex-dividend day. So a number of big stocks post-reporting season are going XD today. Vodafone is one of them. It's acting as a little bit of a drag. So Vodafone, if you take a look at your terminal, you'll see it's down heavily. It's just a mechanical process. We've gone ex-dividend today. The FTSE 100, though, is positive. We're up by around 0.3%. The DAX is higher as well. The CAC 40 is, for the main markets, the outperformer. It is being led today by the luxury sector. Rémy Cointreau out with a really solid set of numbers. That's leading to some really positive performances from the likes of LVMH, who are certainly leading that market. So the luxury stocks are certainly on the front foot. Let's take a look at how the session has developed. As I say, light volume. I wouldn't read too much into the gyrations of the market today. We've actually been in a relatively tight range. We're off our earlier lows. There was concern earlier on, certainly for the airline sector, that new EU rules could further add to the headwinds that are already being generated by COVID. But we finished a little bit higher. We've come off our lows. We're up by around 0.4%. As I say. Quick look at the GRR, just to give you an idea of what is happening from a sector point of view. Very defensive bias, I would argue, in today's gains that we're seeing. Utilities, we showed you RWA just a moment ago in Germany having a good day. The real estate sector is up. Food and beverage is having a solid day as well. Ed Ludlow bringing us that story on food price inflation. But the food story seen as being the more defensive end of the market. So you've got three of the kind of classic defensive sectors doing well. Travel and leisure down at the bottom. Telecoms are down today. I mentioned what's happening with Vodafone. The car sector also just giving back a little bit further ground. It was a big break yesterday, to excuse the pun, on the German market. Let's talk about some individual names and just show you what is happening here. Ryanair, I brought it up because earlier on in the session, it was down. There is certainly fear amongst the European airlines, and there's a big conference taking place in London next week, is that we are going to see some of the COVID restrictions that are coming here in Europe really acting as a big headwind. The recovery has been gathering pace, and people tend to book holidays for the summer in January. If we're in lockdowns at that point, are they still going to do that? Evolution, the gaming company out of Sweden, has had a really tough time this week. It had a conference call trying to set the investment community straight. It didn't work. There is still significant concern about whether or not they're going to have to clean up their user base. There has been accusations made that we are seeing users from sanctioned countries using the platform. And then the real star of the show, Rémy Cointreau today, up by 13%. The stock trading at 211. Huge demand for luxury liquor at the moment. Maybe we're drinking a little bit less, but we're paying a higher price for it. And it seems that the cocktail is definitely back. Huge demand in the United States for Cointreau as a result of that. So Rémy Cointreau's CEO, Eric Vallat, spoke a little bit earlier on Bloomberg Television, talking about inflation, what he thinks is going to look like in the coming year. The head of the French distiller discussed inflation, plus the supply chain story that goes around it, and what comes next for his company in an exclusive conversation with Bloomberg's Tom McKenzie.
Inflation is a fact, first. We see it happening on all dry goods, while even neutral alcohol is plateauing today, but it's been increasing a lot as well. It's not new for us because, you know, we're in a business, for instance, with our cognacs, where demand is potentially stronger than the offer. So we've seen our eau-de-vie price increases starting earlier than this. Now we see it, it's a fact. I think it's going to last for the coming year for sure. I'm not a macroeconomist, so difficult to project myself further, but we do see a strong inflation currently. It's not so impactful this year as we had secured a lot of our contracts for the whole year. It is going to impact us next year for sure. It will have an impact, but at the same time, we believe it is manageable because when you're on the high end, first, people are less sensitive to prices, so there's things we can do on the prices and on our mix to compensate for that. But it's a reality.
We saw the margins increase to 33%. Does that tell us then that you are passing this cost on to the consumer? Are you passing all of the input cost on to the consumer? Can you preserve your margins?
It's not. We do not necessarily work our pricing directly linked to the inflation. Of course, it does have an impact, but for me, pricing is more the consequence of everything we do to build the attractiveness of our brands, to build the quality of our products. So we have a kind of price positioning plan for the years to come, which is not purely and solely related to inflation. But of course, the price increases we had planned this year, which are driven by the strong desirability of our brands, have helped us compensate inflation. This for sure. It's not the cause inflation, but for sure it has helped us compensate for it. But again, it's driven by many more factors than purely inflation. And now the growth of the margin, in fact, is coming mostly from the growth of our sales and a good control of our overheads and costs, while we've been spending more on communication. So it's not solely a gross margin inflation-related issue. It's also a good control of our costs in a context of very, very strong increase of our turnover.
Okay, the importance of cost control. What about supply chains, Eric? Are you seeing any evidence that they are starting to ease? How long do you think the supply chain constraints will be with you?
Well, I'd say it's easing in a sense that it's probably a bit easier than last summer when we had to catch up. Our funnel channels were empty, so we had to stock again. So this made it very, very difficult in this summer. Now it's not particularly easing from a macro perspective, and we see it lasting as well, probably until 2023. It is, of course, it has a huge impact on the costs of logistics. But the cost of logistics is not so big at the scale of our gross margin, so it's not so impactful, even though in absolute value and in relative value, it's a sharp increase. I believe it's going to remain high, but for us, the impact is probably more on the time it takes to ship the goods. So we see our depletions, our sales, really related to the shipments. And I would say that this is probably even more critical today, as we don't like to have the shelves empty.
Remy, CEO, talking to Tom a little bit earlier on in the day, the market's certainly liking the numbers, really positive performance. Remy shares up circa 6% coming into the close. Albertina Torsoli joining us now to give us her take on all of this from Bloomberg News. Albertina, this is a really strong set of numbers. I'm assuming by the share price reaction today that it wasn't all expected.
No, you are absolutely right, even because, just so that you know that, they had already released the sales figures a month ago. So we're speaking here purely of the earnings. A good publication was expected, but, here there were beats everywhere. And it's not only the beats, the fact that, they exceeded expectations, but the size of the beat speaks for itself. Just on the crucial cognac division, the EBIT beat was 27%. That's a lot, and this is going to drive upgrades. Analysts see the street consensus numbers rising by about 20%. They also tweaked the wording of their outlook. Now they see very strong current operating profit growth for their fiscal year. And look, the tone on U.S. demand and China demand, these are crucial regions, of course, for the company, was really upbeat. So, yes, once again, a big surprise here, and it all bodes well, obviously, not only for them, but for the entire sector.
Managing costs was a key part of the conversation we had with the company earlier on. Now, clearly, they've got to manage input costs into the business. They've got to obviously make sure that the product is there and available, which has not been that easy during COVID. But the other big factor is how much money they spend on advertising as well. In terms of cost control, what is going to happen next year? They've got very strong performances. Is the temptation going to be to go out there and try and supercharge this, or are they on a fairly steady trajectory?
Look, I think that there's a very a steady trajectory of premiumization, which means that you increasingly entice consumers to higher priced products. This is very interesting. We're speaking of a food and beverage company here. This is an alcoholic beverage company. But if you look at the dynamics of this company, it's very much similar to LVMH, the luxury giant. Of course, LVMH also has Moët Hennessy, so they're into drinks as well. And what strikes me here is that these companies, both the luxury companies and a company like Remy, which has similar dynamics, has never done so well as in under lockdown. So you would think, okay, stores are closed, restaurants and bars are closed. No, they've never done better. First of all, you've had all this trend of drinking at home, cocktails, and also all this money that you don't spend elsewhere. You want to spend it on higher priced things. You're willing to do that. And what I was talking to an investor today, he was also mentioning this sense that we're still a bit in the roaring 20s. People, it wasn't a war. It wasn't a war that destroyed the economy, but there was COVID. And if you look at what's happening in Europe, where we have stricter measures once again, how will our Christmas look like? People want to go out. They have this sense that they have to seize the moment, go out and party, and treat their loved ones and themselves to something special, just because we don't know how long this will last. Will we have a normal Christmas? We don't know. So what do? The times you do party, you party hard. You're willing to spend money. You're willing to indulge, whether it's in alcohol, that's pricey, in jewels, in clothes. It's a big trend, and it's here to stay for now at least.
But do you think, Albertina, they're going to have to spend aggressively to continue that process? Or actually, does the spend become lower as you work your way through? Because simply obtaining the good is incredibly difficult. Obviously, there are certain types of goods, and LVMH is a classic with this, that you ascribe a higher value to them, the higher the price goes. Do they just simply need to raise prices to make all their goods more exclusive?
No, I think that what is actually interesting of today's share price reaction was that, yes, first half was great, but they actually guided the market to the fact that the increases for this year will solely come more or less from the first half, because in the second half, they will be investing a lot in marketing. He did mention in the interview the marketing expense as well. So, it's not all just sitting back and waiting for things to happen. They're going out there, they're pushing this message of, also an ESG-linked message, drink less but drink better. You're willing to pay more, but pay attention to what you drink. And I think that, it goes a long way in showing where the company is headed. Something that is pricey is worth a lot, and they spend to put it out there, in front of the consumer, and it's going to cost. But this is why I found that today's share price reaction was particularly interesting, because they will invest and there will be more gains to come forward. So very interesting dynamics.
Nearly a 13.5% gain today as we come through the close. 212 is where the stock has finished up. Albertina, really interesting. Thank you very much indeed. Bloomberg's Albertina Torsoli on what's been going on with Remy today. Talking of market news, we're just getting some coming through from the carbon market. EU carbon benchmark futures surging to a new record. There's been a series of them throughout this year, to a record 75 euros a tonne, which is also a good moment. Maybe just take a quick look at where European stocks have settled. We're through the auction process. Little tick lower for the FTSE 100 as we've come through the auction. Nothing really to write home about. Unsurprising, given the volumes we're seeing in the market today. So those are your closing prices here in Europe this Thursday, this Thanksgiving. This is Bloomberg.
Where's the common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector, in Scotland around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Let's check in on the Bloomberg First Word News. I'm Max Ramsey. The European Union's drug regulator has cleared the use of the Pfizer-BioNTech COVID vaccine for 5 to 11-year-olds. The shot has already been approved for use in adults and children aged 12 and above. A final decision on the vaccine is up to the European Commission. In Germany, the number of deaths from coronavirus has now gone over 100,000. The country passed the grim milestone at a time when the latest wave of the pandemic has led to a record pace of infections. Battling the virus will dominate the early stages of Germany's new government. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Max Ramsey. This is Bloomberg. Guy.
Max, thanks very much indeed. Seeing a little bit of recovery in the euro today. Yesterday, we looked through 112, saw a touch below that. We then recovered. Today, we're kind of trading 112. 112, there you go. On the nose. We are, though, at the lowest level in the year. We have seen a significant degradation of the price over the last few months. Jane Foley's target over at Rabobank was 112. Now, we're through that. So where do we go next? She joins us now to give us an idea. Jane, we got through 112 yesterday. We bounced a little bit today. Now what?
Well, that's the question. I mean, certainly, 110 does appear to be looming. It's in the sights, but I'm not really ready to say we're going there, at least not in a hurry, because what worries me, and bearing in mind that I've been a dollar bull, is that there's an awful lot already in the price. So, for instance, if we look to see what the money market is anticipating from Fed interest rates next year, it's around about 60 basis points or so. That's fairly aggressive. And so if the market does think, maybe that's a little bit too much, we've got to backtrack on that, there really is the potential that we might see some correction in euro dollar before we head lower again. And that's what makes me uncomfortable. Yes, I have been a dollar bull. Yes, I've been anticipating, that the dovish tone of the euro would keep the euro soft. But given how far we've come in just the last few weeks, I would feel better, I think, if we had a little bit of a correction, some of those long dollar positions maybe taken out, and then we re-examine the fundamentals. We look at the next payrolls report, maybe we wait for the Fed and see what they do in December, and we come back again.
Do you think the market's being overly aggressive in pricing the Fed? The idea of a faster taper seems to have been taken on board. We've now got the market pricing rate hikes potentially as early as March, albeit there's only a third chance of that happening. But we've moved a long way very quickly. Do you think the market's being overly aggressive, not necessarily with the taper, but when the first hike comes?
Yes, and I think that's the risk really for the dollar at this point, that at some point it will drag back those expectations and say, you know what, okay, we may be hiking interest rates next year, or at least the Fed might be, but maybe not as much as the market is anticipating. Now, there is another thing that we've got to bear in mind, that we do get a different set of members at the FOMC voting in 2022. Now, some of those obviously will be quite hawkish, some of the rotating members, but we do have 3 spare seats on the governorship side, and that could mean that we have some dovish calls coming through. So, you know, there are changes, there are risks to perhaps the Fed could begin to push back a little bit more about the amount of rate hikes that is currently priced into the market.
Yeah, regional Fed presidents are going to have maybe a little bit more influence until those seats are filled. Jane, what does COVID and the pickup we're seeing in cases in the Eurozone mean for the currency?
Well, you know, it is another headwind. I mean, if we look back at Q3 growth in the Eurozone, it was a bit better than expected. But even then, the market was beginning to say, well, look at the supply chain difficulties for Germany. That's going to constrain growth into the fourth quarter. Now we're looking at various restrictions in some Eurozone countries, and that's another headwind to growth for the region as well. So if you like, you know, that gives extra strength to Lagarde's really dovish call. And the market, again, you know, has to examine the fact that there really isn't any realistic chance of an interest rate hike from the ECB in the foreseeable. That said, you know, we do have a new German government now. We have a different voice at the finance ministry, and that could change the groundwork a little bit for the ECB going into the next year.
Jane, always a pleasure. Short and sweet. Thank you very much indeed. Jane Foley, Head of FX Strategy at Rabobank. We're just getting a bit of corporate news. Infineon naming a new CEO. Jochen Hannebeck is going to be the new boss of the company. He's going to have his work cut out for him. This is a business that obviously has been firmly in focus this year. It is a key supplier of chips into the auto sector, and as a result of which the chip shortages we've seen this year have been put Infineon front and center. So we'll continue to keep an eye on exactly how he looks at the business and thinks about that problem going forward. What are we going to focus on next? It's Thanksgiving over in the United States. Turkeys are a lot more expensive this year. Food price inflation front and center. The Macy's parade is back on. I don't think that turkey's going to taste very nice. Pikachu, certainly not. This is Bloomberg.
When your shares are down 20%, it's going to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
So from London, I'm Guy Johnson. This is the European Close on Bloomberg Markets. It is Thanksgiving over in the United States. Inflation is going to be getting a seat at the table because inflation is all over the place, including in turkey prices, more broadly in food prices. Ed Ludlow has been sitting down and assessing the impact.
Right.
It is substantial.
If you are Jay Powell, you're the president of the United States, inflation and turkeys are top of mind. Both.
Yep.
You know, the frank reality is that the meal for all Americans will be 14% more expensive this year. Turkey at the heart of it, 20 to 24% inflation year on year. And it's just a classic example of what's happening with global inflation and the supply chain. This is an industry where there are no fresh turkeys. Why? No laborers to process them. And the supply issue. Everyone's dipping into frozen inventories. They're at all-time lows.
37-year lows, I read.
37-year on frozen turkeys. Do you ever think you and I would ever be discussing that? You know.
And the issue as well is, so I got a friend of mine who's a turkey farmer, and you have to plan kind of months in advance. You get the chicks, but you've got to figure out kind of how big you want the turkeys to be. How much do you feed them? Because if it's single households, you want a small turkey. If it's multiple households, you want bigger turkeys.
And it brings it back to the whole point. This was a COVID shock. When we all went into lockdown in March 2020, global food supply chains were all over the place because people were changing their habits overnight. And it shows we've not quite been able to understand the demand. And also, we're still under COVID restrictions, which impact supply.
Are people dipping into other protein sources? Are we going to...
You know, it's interesting. I think we have a chart of US food price inflation against European. It's still very high, and meat is a big driver across the board. In Europe, that inflation is more muted, which is quite interesting because they have the same problems, right, when it comes to supply chains. I don't think there are too many vegans out there. Funnily enough, though, I spoke to the CEO of Ocean Spray.
It's a growing group.
It's a growing group, I know, you know, covering that market. But I spoke to the CEO of Ocean Spray the other day. You know, cranberries, right?
Yeah.
And it's not the cranberries in short supply, it's the cans.
It's amazing, isn't it?
Amazing.
Ed, thank you very much indeed. Ed missing out on his Thanksgiving Day dinner today. He'll be back in the States very soon. That wraps things up for us. Hope you enjoyed the show. This was The Close. This is Bloomberg.
There's a pretty good chance that you use products made by Meta every single day. If you've never heard of Meta, that's because it's the new name for Facebook Inc., the parent company of Facebook, Instagram, and WhatsApp.
All right, perfect.
In a spiffy presentation on Thursday, Mark Zuckerberg showed off his vision for what he's dubbing the metaverse. That's a sort of mix of augmented and virtual reality worlds which will let the user explore virtual ecosystems. Much of what he showed isn't yet available. It's really his vision. In that sense, it was more like the sort of presentation Elon Musk does, where he looks at what he hopes might happen one day, than what Steve Jobs does, or Steve Jobs did, which is showing off products he already has available. He also, in the course of it, announced a name to Meta. The company will be called Meta from now on.
Our mission remains the same. It's still about bringing people together.
That's an effort partly to show the vision for the future, but also a way of casting adrift some of the toxicity associated with Facebook. But if this new company is going to be a success, or the new company vision is going to be a success, he will still have to deal with a lot of the same challenges that Facebook has faced. Concerns about privacy, content management, those are going to be just as pertinent, if not more so, in the metaverse as they are right now on Facebook's existing apps.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says I look like I'm 101.
I noticed that.
Do you think I need a lift? Is it time
What
that
did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I had no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Jeff Bezos shocked the world when he stepped down as CEO of Amazon. Less shocking was his choice for successor. Andy Jassy was not only one of his longest tenured lieutenants, but the architect of Amazon's multi-billion-dollar cloud business, Amazon Web Services, a moonshot that helped transform Amazon into not just e-commerce, but enterprise juggernaut. Jassy then needed to find his own successor, tapping a former colleague who helped grow AWS in its earliest days, but had since left to run Seattle software giant Tableau. His job, to continue the reinvention of AWS and, in turn, Amazon. Joining me on this edition of Bloomberg Studio 1.0, new AWS CEO, Adam Selipsky. You worked for AWS for 11 years and then went on to become CEO of Tableau Software in 2016. Then you get a call from Amazon to come back and run AWS as CEO. Tell me about that call.
Well, I was having a one-on-one at my prior company, and my Apple News alerts went off like everybody else's did, and it said Jeff Bezos is taking on a new role, and Andy Jassy is taking on the CEO role of Amazon. And of course, Andy and I worked shoulder to shoulder about 20 feet apart for 11 years, so of course I reached out and congratulated him, and we started talking, and you know, the conversation turned to just some of the possibilities, and next thing I know, a little while later, here I am back at Amazon, absolutely delighted and honored to be the CEO of AWS and helping to shepherd this amazing business for our customers.
In that process, did you talk to Jeff as well?
Yeah, I had some communication, but it was principally with Andy, who of course was knew the AWS business best, and of course was taking on the CEO role. But yeah, there was contact, as you might expect, with a small handful of other people.
So what did Andy tell you he wanted in the next chapter for AWS?
Andy reminded me, not that I needed reminding, but that it is really still day one for AWS and for our customers. It is still so early in this business, and we shouldn't think that just because the business has grown rapidly, or just because we're currently the leader in the cloud, that it's anything close to mature. And so he really reminded me that we have to stay hungry, innovate as quickly as we ever have done in the past.
You're about half a year into the job.
Mm-hmm.
What changed while you were gone that surprised you?
Well, I think that so many more customers have really adopted the cloud and have really decided that they're going all in. So, I mean, it was a pretty decent-sized business when I left, but it's really grown, and the customer base has really expanded. And so now we have very deep relationships at the CEO level, the CIO level, across every country, every industry, every use case, and we're regularly interacting with the most senior people at our client organizations.
So you were working at Real Networks
Yes.
in the early 2000s, and I understand you were offered a job at AWS without even really knowing what it was. I guess AWS was in stealth mode.
Well, it was very secret, so it was hard that the company didn't want to talk too much about it, but of course we had to talk a certain amount about it. So the call I got went something like, we have this initiative to turn the guts of Amazon inside out and expose it to other people. And it sounded intriguing, although I confess I didn't fully understand what that was all about. So I came in and started talking to Andy and a few of the other senior leaders, and eventually to Jeff. And I would have to say that even by the time I took the job, I thought I mostly understand what they're talking about, and it sounds like a good idea, and I'm in. But I also was like, well, we'll just have to see how it goes, and Amazon's a big place, and so I think we've got a lot of intent to succeed here, and that's the thing that impressed me was Amazon really had the desire and the intent and the belief that this could be a really good business.
AWS comes out of stealth mode and is the first to market with a cloud infrastructure service in 2006. How important was that first start? And do you think AWS still has an advantage today because of that?
I think the time to market advantage that we had, which was probably honestly 5 to 7 years head start before other companies really started to take this seriously, was an enormous. Frankly, it was just one of the biggest things that happened to us in the early years. Because at the beginning, a lot of people didn't get it. I would get asked a lot in 2006, so what does this have to do with selling books? And I even had a slide with kind of a pile of books on it and a question mark next to it. And the answer was, it has nothing to do with selling books, but the technology which enables us to sell books, being global, being at a massive scale, being secure, being low cost, being highly performant, all that technology has everything to do with offering these types of services externally.
Now, AWS isn't a scrappy startup anymore, and you do have big rivals, even though AWS is still the leader. Microsoft and Google are big rivals. How do you make sure that being big doesn't slow you down?
It's a great question, because we are currently the leader, and I mean, depending on which third party you look at, we're probably a little bit more than twice as big as number 2. And it's really important to continue to act as if we're insurgents, and to be insurgents, and not to start to act like incumbents. And I like to talk about actually managing the business. We want our senior leaders to be managing product and managing customers. And I think as you get bigger and you put more and more layers into your company, it's all too frequent that you start managing math. You start managing ratios and percentages and growth. And I think it's a real disease if you stray away from really focusing in a deep way on the product you're building and in a deep way on what your customers are telling you. And so we try and organize, both with our org structure as well as just with our culture and what we choose to focus on really making sure that everybody is thinking about one or both of those two things, product and customers. And if you keep even the most senior leaders engaged at that level, then all of a sudden you maintain the urgency and you keep acting like an insurgent. We got to feel that urgency every day.
So keep acting like an insurgent. That's the motto.
Absolutely. And structure yourself and build a culture that allows you to. It's one thing to say it, but it's easy to say it, but it's much harder to put in place enabling mechanisms that enable you to do so. And we focus a lot of effort on those mechanisms.
Now, do you think the cloud keeps getting bigger and that AWS and Microsoft and Google just get bigger pieces of an ever-expanding pie? Or at some point, does it become a zero-sum game, and that fight for market share becomes more brutal and more bloody?
Well, I mean, this is a very large market segment. If you look at global IT spend, it's in the trillions of dollars. I've seen estimates like $3 trillion. It doesn't really matter how many trillions it is. It's very, very large. And we've always believed that this was too good a market segment opportunity for there really to only be one winner. And sure enough, you've seen robust competition emerge, and we all compete vigorously. But the segment is just growing so rapidly that I think really for us, we believe that the winning business strategy for a long time to come, and I would maintain forever, is to focus not on the competitors, but to focus maniacally on customers and wake up every day understanding exactly what it is that they need us to build next, and then work backwards from there, back internally to how can we build those things. And if we do the best job at building the most quickly the things that are most important for our customers, then I'm really not worried about what the competitors will do.
You worked 10 feet away from Andy Jassy in the early days. Tell us something about the Amazon CEO that no one knows but you.
You're gonna get me in trouble, aren't you?
get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point, when the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
You worked 10 feet away from Andy Jassy in the early days. Tell us something about the Amazon CEO that no one knows but you.
You're gonna get me in trouble, aren't you? I grew up in Seattle, and Andy, coming from New York, has this fascination I don't understand with New York sports teams. So I've had to endure that for a lot of years. New Yorkers, yeah. So what are you going to do? Although he's I think come to adopt some of the Seattle teams, particularly the new hockey team, the Kraken here.
As he should.
As he should, exactly.
So how do you expect Andy will be different from Jeff? Or how has Andy already been different from Jeff?
Well, I think we're all different as leaders. I think it's all important that it's important that we all bring our own stamp to it and operate within ourselves. I don't think I would be a very good Andy. I don't want to presume, but I would assume that Andy wouldn't be a great Jeff, because Jeff's Jeff, Andy's Andy, and I'm me. So I think that Andy will certainly bring a great depth of experience from AWS, which is one important part of the business, and having operated that business for so long, and I expect that'll also give him an opportunity, although he was involved in other parts of Amazon, certainly for a number of years. We'll be able to bring a fresh perspective to the whole company, just as I hope to bring to AWS. And I think that fresh perspective is often helpful. I think just the mere act of change is useful for the business, for customers, for employees, and just to shake things up a little bit. So I think just a fresh perspective.
How will you be different from Andy?
Well, I think that the world around us is changing so much that we're going to have to be different. It doesn't matter what we did yesterday. And right after I joined, we actually added 2 new leadership principles, which is very exciting. One's around striving to be Earth's best employer, and the second around focusing on the fact that success and scale bring broad responsibility. And those are things about which I personally am very passionate. And so I really personally look forward to digging in and helping the company to figure out what are those things that we have to figure out. Where can we innovate to be Earth's best employer? And then also to figure out externally, what can we do to really be great citizens of our local communities, to be great citizens of our national communities, and to be great citizens of the global community. And I care a lot about those things, as a lot of other people do here, but I plan to put a good amount of energy and time and focus, and hopefully help Amazon innovate in all of those areas.
How closely do you work with Andy day to day? Does he, regularly weigh in on AWS decisions or not?
Well, he's got a pretty broad scope of things to worry about now, so he's got a pretty intense day job, I believe. So he's really focused across the company, as you would expect him to be. But that being said, obviously AWS remains an important part of Amazon, and so we touch base regularly, be it in person or via email, just on the most important things going on in the business.
Does Jeff ever weigh in on AWS decisions?
Yes, I mean, really from the beginning. Jeff was involved at the very, very beginning at some of the most fundamental decisions. How do you price EC2? What do you name S3? What does the detail page look like? Obviously, over time, the business grew, but Jeff was always available when we needed him, and I certainly anticipate that'll be the same going forward.
So is he still available now? And what do you understand that Jeff's priorities are?
Sure. Well, I'll let Jeff speak to his own priorities, but certainly Jeff has been available when, for example, we've been doing our annual planning cycle, as many companies have, and it's been great to have Jeff weigh in on really where we're heading for the next year and beyond, and to just make sure it's easy to get focused on the details of the business, and it's great to have multiple people who can help you pick your eyes up a little bit.
Now, you joined AWS in the middle of a pandemic. You came back to AWS in the middle of a pandemic. That's hopefully moving into the rearview mirror. Moderna is one of AWS's biggest customers. If it weren't for the cloud, if it weren't for AWS, would we have had a vaccine as quickly as we did?
I've got to tell you, Emily, it's been an absolute privilege for us to work with Moderna because what they're doing obviously is literally life-saving, and they've been so innovative and so creative. So Moderna took a drug development process to get to a vaccine candidate. That process would typically have taken them 20 months. And doing that on AWS in conjunction with all the innovation on their side, reduced that 20 months to 42 days. 42 days to get the vaccine candidate, the mRNA vaccine candidate for COVID-19. And that was really running multiple parts of Moderna on AWS. So if you look at the drug design part, they had their drug design studio running on AWS, all the way to manufacturing with the new digitized manufacturing that they call their digital manufacturing platform. So it's really end-to-end, and the ability to use massive amounts of resources and to pick the exact type of service and capability for each part of the job, and to really bring the full set of resources to bear, in addition to not having to focus on the IT and the infrastructure and the technology, and rather letting Moderna focus on the all-important job of drug discovery. So working in partnership, it was just magnificent to see what they accomplished.
Since you joined AWS, a number of longtime AWS leaders have moved on to Microsoft, to Stripe, to Tableau. Does that concern you?
Well, actually, retention has been very good. If you mentioned the senior leaders, if you look at the VP plus ranks, the VP and above ranks at Amazon, the average tenure is over a decade, over 10 years. So that's actually very, very strong retention. So of course, you're always going to have some level of people coming and people going, and at the end of the day, that's actually healthy for the business. You want new perspectives to come in, of course, in the right proportion.
Amazon has opened an investigation after 550 employees supported a petition claiming a culture of discrimination, harassment, bullying, and bias. What's the status of this?
Well, we are incredibly focused, and I personally believe it's incredibly important to really have a very diverse, inclusive and equitable environment. And we're going to make sure that whatever it takes, that we've got that. So we believe that we're really doing a lot of things to deliver on that. And we've got a lot of innovative efforts around bringing in a diverse workforce, which we have to have, both because we're going to serve our customers best. They're diverse. We have to match that diversity. And also, I just believe it's our responsibility, and it's the right thing to do. Yeah, anytime there is any possibility that things are not, something has not gone the way we wanted to, we're going to investigate it thoroughly. That's what we're in the middle of doing in this case, and we'll make sure that we're operating in a way that's consistent with our values, and that's always the only goal.
If you could rewind to the early 2000s, the earliest days of AWS, is there anything you would have done differently to build an inclusive culture, to start with a more inclusive culture, to make sure that it didn't become a boys' club?
Well, I don't think that's what we have. I think that we do have a really fun, exciting, innovation-led, and inclusive culture. And that being said, these are hard problems. I think we've done a lot, but we are nowhere close to where we need to be. We're going to be restless and dissatisfied with our progress on DE&I, just as we are with every other part of our business.
Mark Zuckerberg is making a big bet on the metaverse. How big do you think it's going to be?
It's such an interesting sentence. The metaverse is real.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I look at the opportunity we provide, and providing access to information and knowledge, I think will end up being on the right side of history as well.
AWS has the biggest trove of sensitive corporate data in the world. I'm curious how you think about the balance between data and privacy and freedom and civil liberties in the modern era. I mean, there are governments, there are nation states around the world that want that information. Hackers and criminals want that information.
Well, we're very clear to start with that our first job is security. We often say security is job zero. It was on the first page of our operating plan pretty much every year that I can remember.
But what about when governments request that information?
So,
subpoena that information?
Sure. Well, we are very clear that our customers' data is their data. So the data belongs to our customers, and not everybody operates that way. We are not going to look at customers' data. We are not going to compete against our customers using their data. Their data is their data. And furthermore, we have all sorts of architectural best practices that our customers should be and are using for any sensitive data. And so a lot of that really relies around encryption. And so we've built a lot of different encryption capabilities so that any sensitive data, which could leak for any reason, be it to a government, be it to a hacker, be it to anyone else, any form of security breach, that it's encrypted and useless to anybody else. Given the broad array of encryption solutions that we provide, it's actually very doable and powerful for our customers to safeguard their data that way.
Mark Zuckerberg is making a big bet on the metaverse. Is AWS going to have a role in the metaverse?
I think AWS already has a big role in the metaverse. So I think the cloud enables the metaverse. So if you think about all of the compute capacity, all of the storage, all of the machine learning which is required to create compelling and delightful end user experiences in the metaverse, a lot of that is already today running on AWS. So if you take Epic Games, for example, so Epic runs Fortnite, massively popular game, 350 million users worldwide, and Epic runs almost everything on AWS, from the back-end servers to the analytics and everything in between. So I think that's a great example of the metaverse at work, and all that's happening today on AWS. And we anticipate that's only going to grow really rapidly in the future.
How big do you think it's going to be?
It's such an interesting sentence. The metaverse is real, and yet it's virtual at the same time. I think that if we continue to do what we've always done, which is to provide a technology platform that allows organizations to transform, then these gaming and entertainment and social media and other companies will be able to do what they do best, which is to focus on innovating on behalf of their end users. And I think that the metaverse and many other areas will be rich with inventions.
So this next conversation will happen in the spheres, in the metaverse. That's where we'll next meet. How about that?
That could be. I'll meet you in the metaverse.
All right, see you there. Now, I know that climate change, and stopping climate change, and your data center footprint is a big passion of yours. How fast will Amazon's data centers get to carbon neutral?
Amazon is already the largest purchaser of renewable energy in the world. And we intend to be 100% renewable energy by the year 2025. We had originally said 2030. We actually accelerated that by 5 years to 2025. And that's part of our broader climate pledge that Amazon created, and to which we've now gotten 200 other organizations to sign on to. And the climate pledge is to be net zero carbon by 2040, 10 years ahead of the Paris Accord target. Yeah. So we know how to do some of that. Other part are going to require invention, but we really look forward to it, and I think it's one of the most important things we can do for our generation.
Amazon counts some of the biggest oil and gas producers as its customers. Isn't that a contradiction? Should you be kicking them off your platforms?
Those customers are trying to get to sustainable business models which rely on new energy sources And so many of those customers are figuring out how do they get to wind, how do they get to solar, how do they get into batteries, all new business models relying on renewable energy. And I think rather than abandoning them and having them maybe dig in more on fossil fuels, if we can enable them to move faster, to be more innovative, and to be more agile in figuring out new business models, new technical solutions, experimenting, failing fast, and moving on to the next idea, then the whole world will get to the renewable energy solutions that we need.
At this year's reInvent conference, it'll be the first time that Andy Jassy is not giving the keynote. You will be. Give us a preview. What can we expect to hear?
I think we're going to have a lot of really exciting announcements. So I think across our service portfolio, you'll see that. We have a lot of exciting partner announcements. The partner ecosystem still remains, to this day, so important to what AWS is doing, and we have some great announcements lined up for that. And then I think people are going to want to see that we're making it easier and easier for them to consume the cloud and to work with AWS. And so we're going to continue to, in addition to building more powerful basic capabilities, we're going to continue to make it easier and easier in a variety of ways to interact with AWS.
Adam Selipsky, CEO of AWS, thank you so much for joining us.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Esta operación definitiva para dar con la captura de este bandido la planeamos el 15 de octubre del año en curso. A las 8 de la noche en una guarnición de Bogotá nos reunimos con los oficiales de inteligencia de la policía, nos reunimos con los oficiales de planeamiento de operaciones especiales de las fuerzas militares y de la Policía Nacional, y es cuando se decide cambiar y darle otro salto a esta estrategia.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Do you think competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever. But nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market, and this market has three very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the U.S., New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one directional traffic from the US to the UK, and now it's open, of course, to UK nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
All right, so here we are, one of the elephants.
Since this very first YouTube video was uploaded 16 years ago, the world's most popular video network has exploded to more than 2 billion users in the farthest corners of the planet, now raking in billions of dollars every year. It's evolved a long way from cat videos to become a one-click journey to the center of the zeitgeist, pop culture, and kid culture, amplifying some of the brightest and sometimes darkest traits in all of us. While YouTube has elevated a generation of creators and educated and entertained generations of viewers, it's fought misinformation, terrorism, racism, and violence many clicks along the way. Lately, YouTube's biggest battles are focused on eliminating COVID and vaccine misinformation and keeping the platform safe for kids and teens. On this edition of Bloomberg Studio 1.0, we rewind to talk about where YouTube has been and fast forward to where it's going next with one of the longest tenured employees and women at Google, the CEO of YouTube, Susan Wojcicki.
It's been 5 years since we last talked on camera. And we have a new president. We are weathering a pandemic. The most watched video on YouTube is
Baby Shark.
Baby Shark. So a lot's changed since 2016. How do you feel about YouTube 2021 versus 2016?
I feel good about it. It's definitely been a while, and in technology, things move so quickly. So a lot of things have changed since 2016. And I mean, overall, I've been really pleased that we've continued to grow and grow our ecosystem of creators. We've invested a lot in responsibility, and that's been a really big focus for us. And you know, we've weathered through a pandemic and a lot of hard challenges, but overall, I'm feeling really good.
You've been at Google for 20 plus years, going all the way back to Larry and Sergey in the garage. You've been the CEO of YouTube for 7 plus years. How has your job changed in that time?
Since I joined being the CEO of YouTube, I would say one of the biggest things that has changed certainly has just been maybe the recognition of the importance of digital video. So when I first joined, actually a lot of people would say, oh, like, why did you join? I was running ads beforehand, and that's been the main way Google generates revenue. And so a lot of people said, like, why did you leave that and go to YouTube? But I always believed in digital video, and I believe that now we see that the world also believes. We've seen a lot of adoption of digital video and the benefits that that can have.
You've championed this diversification strategy at YouTube since you started. What's working and what's not working?
Well, our main way of generating revenue is from advertising, but we also have really grown our subscription revenue, and that has been really, really important for many different reasons. So that has enabled our users to have an experience where they can have music, YouTube Music, and Premium. We just announced the 50 million subscribers that we were really excited about. But we also see other ways that our creators generate revenue. So our creators, for example, generate revenue with channel subscriptions. They may sell merchandise. We also have things like digital goods, so like Super Chat, Super Thanks. And so we've basically diversified the number of ways that our ecosystem is generating revenue.
The original tagline for YouTube was broadcast yourself, and that concept has exploded. You have ordinary people in the spotlight. When they grow up, they want to be an influencer. They want to be a YouTube star or a YouTube creator. What do you see as the future of the creator economy?
I see a lot of possibility with the creator economy, and because I see that many people have a lot of interest and they have a lot to offer, and beforehand they wouldn't have been able to have shared that with the world. And so there's so many people, depending upon what their talent or their interest is, whether it's a sport or cooking or gaming or hairstyles, that people have come out and really been able to share that and create a lot of jobs. So we actually see like we actually saw a 35% increase in the number of creators that are generating six-figure income out of YouTube. And in the last year. And so that's just an example of like how the creator economy is continuing to grow.
Well, and for years, YouTube was the only company that actually paid creators, but now a lot of companies are paying creators. You know, Facebook and Instagram, Snap, TikTok. How do you see that competition playing out? Who wins?
Well, it is a competitive landscape. And in general, competition's good. It makes everyone work harder, and that's good. I mean, we look at creators and we say they're going to come to us if we do the best job. And creators come to us looking basically for fame and fortune. Like, how can I have a skill or I have a talent, something I want to share with the world, like, and YouTube can help that be known, can help them provide that fame, but also we can generate revenue for them. And so as long as we're doing a good job of that, creators are going to come to us. If we start to fail, then they're going to leave us and they're going to go to another platform. And so we just need to work really hard to make sure that we deliver that for our creators.
A year ago, during the Black Lives Matter protest, YouTube made big commitments to Black creators in particular. What's been the progress there? And how do you see YouTube, the potential for YouTube to be used as a tool for social justice?
Well, so we'd made an announcement that we were going to do a $100 million Black Voices Fund. And so we're continuing to develop content there. But one of the other things, and I think there's been a lot of great content that's come out, and we'll certainly see more. But you know, because YouTube doesn't have any gatekeepers, like you can just post and become a creator. You know, we have seen a lot of people of different backgrounds and underrepresented backgrounds become creators and have audiences. We never really measured it beforehand because we didn't have a way. And so one of the things that we've done is we've enabled creators to now tell us what backgrounds they affiliate with, so we can have a better understanding of how they're doing on our platform.
Let's talk about YouTube Shorts. It seems to be a top priority. Yeah. We all know that TikTok is on the rise. Yeah. How important are YouTube Shorts to the platform, to the company?
So YouTube Shorts is very important. We see that creators and users want to watch all types of content, long form, short form. It turns out that the first video that was actually ever uploaded to YouTube, me at the zoo, was an 18-second video. So it was a short form video. And we have lots of short form videos, and we've had it way before TikTok did. But what we have really been leaning into more is just enabling those to be found. And in a lot of the creation tools. And so bringing a lot more mobile creation is really important for us going forward.
Did you notice that viewing time was being lost to TikTok? Did you see that trend? And do you see TikTok as a sort of existential threat?
I mean, we definitely see many competitors in this space. What we're just focused on are like our own metrics, like do we see our users engaging? Where's our opportunity? And we're always looking around and seeing what our competitors are doing. And if they're doing something that we think would be good for our users and our creators, like, you know, we're also gonna look at how we can improve our own economy, creator economy, and what's good for our users.
I think a lot of people, you know, we talk about vaccine hesitancy and they blame social media. They say YouTube's not doing enough.
One of the big things for us is to continue to work with public health experts to get their messages across.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's your big day. Are you excited?
Mama is tired.
6 feet apart.
You have to feed your creativity.
Built this tree house.
You guys ready for the movie?
See what we can do.
At this point, YouTube has become a hub for discovery, for information, for, it satisfies our curiosities, right? That comes with a lot of inspiration, but also with misinformation. When it comes to vaccines, vaccine hesitancy, videos that cause a public health risk, where do you want to see YouTube do better?
We've taken responsibility very seriously. It's been one of my top priorities. So first of all, we want to make sure that if there's information that violates our policies, we came up with 10 different policies around COVID. Then if that's a violation of policies, then that's something that we'll remove. We removed over 1 million videos associated with COVID, but we also want to make sure that we're raising up information that we think that come from trusted and authoritative sources. And we've really been able to do that.
I think a lot of people, we talk about vaccine hesitancy and they blame social media. They say YouTube's not doing enough, How do you respond to that?
Yeah, I mean, I think, well, first of all, we're always learning. Just to be fair, we're always thinking about how can we do better. We're looking at the feedback and working with public health experts across the board. And, I think one of the big things for us is to continue to work with public health experts to understand, what are the ways that we can partner with them to get their messages across. And I really believe that is something that's really changed is the evolution of bringing creators, musicians, experts talking about public health. We never would have seen that before the pandemic.
How much do you internalize the criticism of YouTube's content? Do you take it personally? And how does that influence the decisions that you make as CEO?
I want to be doing the right thing, and I care about that. I care about the legacy that we leave. I care about the world that we leave to our children. I care about how media is consumed by the next generation and by everyone today. And so I really have put a lot of time and effort to make sure that we are acting responsibly. And there's always a balance between the free speech and the right, but being responsible and taking down content that we think could lead to some kind of real world harm. Yeah. And so, sure, I think whenever you're in a position like that, there's going to be a lot of criticism. But our goal is just to continue to talk to experts and evolve.
And how do you make decisions in those tough moments where it's a tough call? How much of it is making a decision or leading by consensus, and how much does it come down to you?
The goal is that when we have tough decisions, they are improvising in some way. We've made a concrete set of decisions beforehand, and then we're looking and saying, is this something that meets our standards? Is it a violation or not a violation? And if it seems like there's some set of issues with the content that we have on the platform, we're going to go back to experts and then reevaluate. Should we be making changes to our policies?
YouTube helped keep a generation of children connected, educated, entertained, distracted through the pandemic. What have you learned from that experience, and what do you see as the potential future of YouTube as a tool for learning, as a tool in schools?
When I meet people and they find out I'm the CEO of YouTube, almost always they tell me about something they learned on YouTube or something their family member learned. So I see that as being a very significant part of YouTube. And during the pandemic, we certainly saw that a lot more education went online, and we had all the homeschooling. We had people who had to also just learn a lot of skills that they hadn't learned beforehand. But probably the biggest thing that we also learned was and that I really saw, was a need for us to continue to work with educational institutions, and the need for us to be able to integrate with some of the learning tools that the kids are all using, because they are using YouTube, and there's a lot more that we can do to really help educators have YouTube be a key part of the curriculum.
My kids are on YouTube a lot, and sometimes more than I want them to be, and sometimes it's super productive and they're learning something cool, and sometimes it's not productive at all. How are you innovating to make the time that kids spend on YouTube more valuable, and of course, safe.
It's very important to me as a parent to make sure that we're giving parents options about what they want their kids to see. And that's one of the reasons that pretty much as soon as I got to YouTube, we started working on YouTube Kids, which is a separate app, which is important for kids in terms of how we can control the quality, and we can give parents a lot more control about what kind of content is appropriate for them and their family. And there are many other things, like we actually just came out with a supervised experience for tweens, because tweens was one of the age groups that was actually hardest. They usually don't want to be on the kids app, but they're not 13 to be on the main app, and so the supervised experience is something that we recently came out with.
The Wall Street Journal has been doing some in-depth reporting on Facebook. The report is that Facebook knew that Instagram was toxic for teen girls and didn't do anything about it. Does YouTube look at the impact it has on teen users, the influence it might have on someone's body image or self-esteem?
First of all, I think it's a very important topic, and we do have a panel of experts that we work with to be able to help us understand what are the different ways that our product could be used, or how do we face some of these challenging issues to make sure that we're getting the best advice. We certainly do see, for a lot of really tough issues, that YouTube can be a really valuable resource. So body positivity, mental health, we see a lot of creators actually talk about mental health, and that for a lot of kids, it like destigmatizes and enables people to talk about what's happening and what's going on with them.
The potential long-term impacts of YouTube on teens and on children, whether it is toxic or whether it's addictive, is that something that you wonder about? Is that something that you struggle with, not just as a CEO, but as a mom?
We certainly want to make sure that we are doing what we can to be responsible with kids and in every way possible. And that's one of the reasons that we actually have worked hard to give parents as many options as possible for them to decide what is important for them and their family, whether that's like limiting screen time, like limiting what is the content they actually have access to. I mean, even letting parents just say, these are like the 10 videos. My kid can only see these 10 videos. And so that is really important for us to give the tools back to parents for them to decide what is best for them and their family.
Are you concerned about looming regulation?
There may be regulation that is well-intended, but actually then has a really negative impact.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I would like to begin by addressing the heinous attack on the United States Capitol. Like all Americans, I am outraged by the violence, lawlessness, and mayhem.
How much did President Trump test YouTube, and how much did it test you as a leader?
Election integrity is something that we see incredibly important, and we've leaned into in every way we possibly can. We treat all public figures and all public leaders the same as we treat any individual, and so meaning that everybody is held to the same standards. And so we definitely held President Trump as we would hold all other presidents and all other elected officials to the same standards that we hold our creators and anyone else on YouTube.
But was that difficult for you as the CEO of the company? I mean, that's like a big responsibility.
I mean, yeah, it is difficult, but it is very important. And we also are global. So we're dealing with leaders from all over the world. And there were a number of leaders and there continue to be a number of leaders that post or that there's content that may be a violation of our policies. But we do hold a consistent standard across everything that we do.
YouTube was the last platform to ban Trump, and you have said his channel will be reinstated when an elevated risk of violence has subsided. How and when specifically will you make that decision?
Well, we'll make that decision based on a number of different factors, whether that is like events in the news, signals we're seeing from the government, and we'll certainly continue to evaluate that based on a large number of signals that we see.
And will he ultimately be reinstated?
I mean, we've stated that we will reinstate him when we believe that there is no risk to public safety or no public danger.
Google just removed a voting app for Russian opposition leader Alexei Navalny. Yeah. The Russian government seems to be stepping up requests to take down content. You've talked in the past about your family history, your grandparents living behind the Iron Curtain, being concerned about censorship back then. And Russia is a huge YouTube audience.
Yeah.
How concerned are you about Russian government overreach?
One of the things that is important to us at YouTube is the fact that we do enable so many voices and that we do enable people to express themselves and really celebrate the freedom of speech. And we certainly, that's a core value of ours. But when we work with governments, there are many things that we have to take in consideration, like whether it's like local laws or what's happening on the ground. And so there's always going to be multiple considerations that we're going to have to take into consideration.
Navalny said that YouTube deleted a video, one of his videos. Was that at the request of the Russian government?
We certainly get requests from governments, and we look and consider why are we getting the request, what's actually happening on the ground, and based on a whole bunch of different factors, we make a decision. So we don't always, those are not always requests that make sense for us to honor, but in certain cases, we will honor them in that country.
The Biden administration seems to be targeting big tech. We've seen Mark Zuckerberg, we've seen Jack Dorsey now testify before Congress multiple times. And I've heard it said that YouTube is getting a pass. Do you think you should be up there testifying?
Well, I think we do get a lot of scrutiny. I feel like there's a lot of scrutiny. And because YouTube is part of Google, Sundar has testified a number of different times and answered many different questions on YouTube. So I do believe there's a certain amount of scrutiny. And if I were ever asked to testify, I certainly would go and testify as well.
You're one of the most senior women at Google, if not the most senior woman at Google. Google has faced a lot of scrutiny for how it treats women in recent years. How much progress do you think Google has made in hiring and promoting women across the company? And how much progress do you think still needs to be made?
I see a really big effort across technology as a whole to be able to be more inclusive. And I think that is really positive. I've been a big supporter of it since the very beginning. And I mean, I think at Google, there are many efforts and there's a lot of work that has been done. And I'm sure there's a lot more for us to continue to do. And if you just look at the stats, you can see there are not enough women. We need more women in technology. And I think we have made a lot of progress, but it's still hard. It's hard to be, it's harder to be a woman in technology. It's harder to be a minority of any kind. And so I think there's still a lot of work for us to do.
When we last spoke 5 years ago, I asked you about being a mom. You have 5 kids, and you said something that really stuck with me. You said being a mom makes me a better leader. I prioritize better. I see something growing fast, and I run towards that. If something's growing closely, I'm like, I don't have time for that. How has that management strategy played out for you?
I think it's played out really well. I think it's been, prioritization is everything when you look at it, because we have a lot of opportunity. There's a lot of moving pieces, very dynamic environment. So if you can prioritize and say, these are like the most important things to do, then you're gonna get there faster.
Larry and Sergey have now left. How long do you plan to keep running YouTube? How long do you plan to stay at Google?
as long as I have a mission that I believe in and things that I'm excited about getting done. So I have a lot of ways that I see that YouTube can continue to grow. I have a lot of products and ideas and things that aren't yet released and things that we aren't yet doing. And I'm excited about getting those done. So I think if there comes a time where I no longer have a list of projects, or I feel like I don't have that much more to add, then it'll be probably time to do something else.
Would you throw your hat into the ring to be Alphabet's next CEO? Or if the board asked you, would you step up and do that?
Well, I think Sundar's doing a great job. I'm very pleased. I think he's doing, I mean, it's a very challenging job. There's a lot of different constituents and a lot of product, a lot of different issues. And I mean, I'll just say I'll always do whatever would be wherever I could be most helpful to the company.
Do you still talk much to Larry and Sergey?
I do still see them socially, though, not work-wise.
Do you ever talk about work?
I mean, sometimes maybe casually, but our business is very complex right now. And there's a lot of things that are happening. And so it's hard for, I mean, people may have different opinions, but to really engage, it's a long conversation.
What do you want your legacy to be?
I am proud of the way that we've been able to enable people to have a channel, to have an audience. Like, I just met with a number of three creators, and like YouTube really was able to let them shine and create audiences in a business and employ people that otherwise never would have happened. And so that's certainly one, continuing to grow that. I'd say second, it's been really important to me too to see a lot more women in technology. That has been just a personal goal of mine, is to like be a role model and try to support women. And I feel very fortunate to have gotten to where I have, and I know it was due to like many different factors. And I want to support the next generation of women and see technology as like an open place where anyone can come and be successful. And then probably lastly, continue to grow what we're doing with education.
Susan Wojcicki, CEO of YouTube. Really great to have you on the show.
Thank you so much for having me.
represent 5,500 forecourts, which is roughly 65% of all service stations in the UK. Of the ones that we were able to survey yesterday, roughly 1,500, 27% said they didn't have any fuel, 21% said that they had one fuel type or another, so that's either petrol or diesel, and 52% said that they were fully stocked. Northern Ireland, Wales, Scotland seems to be okay, but we still are seeing, like your reporters are seeing, some stock outs at sites around London and the South East, I'm afraid.
When do you feel confident that this will 100% be in the rearview mirror?
Well, what we're hoping is those people that got fuel over the last few days obviously don't need it again for another few days, and that will give us a chance to actually start to restock the network. So we're trying to get it back to a reasonable level today and tomorrow, and then over the coming weeks, because it will take a number of weeks, to get it back to the sort of more normal running levels.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Caroline Hyde, in for Emily Chang. This is Bloomberg Technology. Coming up in the next hour, supply chain pain continues ahead of the shopping season, with retailers struggling to keep supply up with demand. How Amazon is sacrificing profit to meet delivery times. Plus, Zoom has lost $100 billion from its peak as the pandemic-fueled rally fades. We're going to be live with the Zoom CFO, Kenny Steckelberg, on how the video platform is planning to maintain momentum going into 2022, and how the tech behind cryptocurrencies is being used for real-world emergencies. Ava Labs is partnering Deloitte to use the blockchain to empower first responders while out in the field battling natural disasters. We'll get to all of that in just a moment, but first, let's get to where the markets managed to show a little bit of green. The Nasdaq 100 outperforming. Bloomberg's Kriti Gupta is here, and it was thin volume, but it was higher.
A little bit of holiday volume already. Markets kind of hitting the snooze button, but nevertheless, the S&P 500 ending in the green. Now, we had a slew of economic data, but the takeaway here is that the consumer at the end of the day is still strong. That inflation metric that the Fed uses still not skyrocketing to the point of worry. And that's really why you're seeing these marginal gains in the S&P 500. But like you said, Caroline, tech has been outperforming. You see that with the New York FANG index just a little bit higher. I threw onto the board the Bloomberg Dollar Index and yield as well, because of course we know tech is extremely sensitive to yields. That's a relationship worth watching, but so is tech's relationship with the dollar, because at the end of the day, they are both these global havens. So really keep an eye on that. But as I talk about yields, I really want to talk to you about bond volatility in particular, because as we start to wait for more signs of this Fed liftoff, this rate hike liftoff, bond volatility, I think we have a chart here, bond volatility has actually been extremely high. Equity volatility has been kind of low, but you're starting to see that creep up a little bit. You can see at the very edge of this chart, the white line starting to hint up, which tells you in the next couple of weeks, as we get more signs from the Fed about what's coming next, equity volatility and tech stocks in particular, which is a big part of the index, of course, is worth watching. Let's get back to the intraday action, though, and talk about what happened today. I said the tech was outperforming today, and you can really see the semiconductors in with that trade, up 0.9%. Chinese ADRs as well, another big component of that New York FANG index, up 1.2%. Biotech up marginally as well, but it was crypto that's been the outperformer lately that actually was the laggard today. That's your macro story, but all the action really was under the hood. For those details, we go to Ed Ludlow.
Yeah, you mentioned strength in semiconductors. I want to get to some of the movers in the day. And in terms of the biggest points movers on the NASDAQ 100, it was two chip makers in particular that I'm keeping my eye on, AMD and NVIDIA. AMD, that stock trading at a record high, the biggest jump in 2 weeks, up 5%. NVIDIA also rebounding from 2 days of losses. Remember, we've been talking about NVIDIA as having such a significant weighting in terms of technology stocks that are in the S&P 500. To the downside, Electronic Arts still under pressure. Been a lot of selling on that stock recently. Battleground 2042, its latest title, not doing so well. And oh, this one's for Caroline, actually. Autodesk. I want to talk about Autodesk, down 15%. This isn't a stock that we talk about. This is the $55 billion company that we never talk about, but I kind of feel that we should. They make software for engineering companies. They make software for builders who are in the early stages of big, construction projects. Look at that precipitous fall on its earnings. It's basically narrowed its forecast for this fiscal year, citing supply chain constraints. And I thought to myself, hold on. You're in the early stages of planning, but what they're saying, the executives, is our customers are suffering, right, in these industries that are suffering because of supply chain crunches, and we are suffering as a result, kind of giving some very conservative guidance there. Finally, Caroline's been talking about this all day long, retailers, because we are on the cusp of Black Friday, this busy period of November where there's so much retail activity, the biggest drops on record for Nordstrom and Gap. They just can't manage the supply chain. They're not able to get inventory. It's a missed opportunity for sales. And Amazon pretty much flat. Just want to mention some data very quickly from Adobe that in the month of November so far, out of stock messages are up 227% year on year versus January of 2020, right? And against pre-pandemic levels, November 2019, up 261%. That is what consumers are facing this week as we go into the Thanksgiving and Black Friday period. And it's really interesting for those that are trying to kind of trade off between brick and mortar and, in Amazon's case, e-commerce.
Exactly. If they are managing to weather that supply chain pain, it's so smart, Ed Ludlow. We thank you. Mentioning, of course, well, the out-of-stock messages, 2 billion of them in October alone in the United States. 325% from October in 2019. That's all according to Adobe Analytics. Jordan Holman breaks down why supply chain disruptions may mean fewer Christmas discounts and perhaps a disappointing Black Friday.
Looking to get your little one a Tonka truck this holiday season? Well, you're gonna have some trouble. And if you want to give your spouse a personalized ring or pendant, you may already be too late. The National Retail Federation sees 8.5 to 10.5% consumer shopping growth from last year, pushing forecasts to almost $860 billion. But as shoppers begin spending on gifts, many aren't finding what they want online, or they're seeing bare shelves in the stores. This year, supply chain issues are threatening to derail everything. 2 billion out-of-stock messages were sent in October alone. That's up 325% from the same month in 2019, according to Adobe Analytics, who is seeing electronics hit the hardest, followed by jewelry, apparel, home and garden, and pet products. After 2 years of shopping disruption, it's safe to say retailers need a win during these crucial months, but it won't come easy. Concerns around COVID shut down factories in Vietnam this fall, which slowed down production. Containers are piling up at the ports on both the west and east coast of the U.S. There are too few drivers to shuttle the goods to distribution centers and not enough space in warehouses. And all of this could affect the types of gifts that you want to get for your kid, your spouse, or pet. Retailers, especially mom and pop shops, say that they've had trouble getting Tonka trucks, puzzles, teddy bears, bikes, you name it. And if you usually get a Christmas tree, this year, both live and artificial trees may be harder to come by. Jewelers are saying better quality, larger cut diamonds may be in short supply. Even florists are having a tough time getting everything from tulips to white roses. You may even notice the supply chain bottlenecks when walking into a store. Ever see more denim jeans than cotton shirts? Things like books and dolls set to go out on sale just in time for this holiday season are hitting weeks-long shipping delays.
Shipping delays that look like this. While retailers race against the clock to stock shelves ahead of the holiday season, containers full of goods pile up outside of the ports of Los Angeles and Long Beach, in the streets of Wilmington, and the outskirts of the Twin Ports. Officials say between 150 and 200 citations are issued for misplaced containers every week.
For the folks who've already started their holiday shopping, more than half said that a product they wanted to purchase in a store or online was already out of stock. Plus, retailers aren't looking like they're going to offer as many discounts this season. This holiday season isn't the return to normal that the retail industry expected at the start of this year. It has its own set of challenges. The biggest message they're trying to tell people is, shop early to make it a merry one.
Need to get me a wreath. Jordan Holman there. Meanwhile, Amazon, on the other hand, is prepared to actually sacrifice the bottom line to get products to customers on time by going a pretty unconventional route, literally. Now, I want to bring in Bloomberg News reporter Spencer Soper, who covers all things Amazon for us in Seattle. And all things Amazon is thinking creatively about how to get your goods to you at the right time.
Yeah, there's several examples of that, and where Amazon just finds an alternative solution. You know, so if the ports in Long Beach are clogged, they'll load up and shipping space is scarce. They'll find a ship just with some space. We found an example of that where they had a ship that was loaded with rolled steel ultimately heading toward Vancouver in British Columbia. They loaded it up with containers and inventory, just the deck of the ship, because the hull of the ship was already spoken for. They sailed it into a sleepy port in Everett, about 20 miles north of Seattle, that usually serves the timber and lumber industries, and basically use that as a way to get inventory into the country. Even though it's not ideal, even though it's not near all of their warehouses in Southern California, it was still a more expensive and trickier way, but still a way to get inventory in for the holidays. And that's the message they've sent, is that they're willing to spend whatever it takes, do whatever it takes to not let customers down over the holidays.
And that's kind of very in keeping with the Amazon we've known to understand on the public markets for years now, Spencer. It's interesting that, are they favoring themselves, their own products, or what about some of the merchants?
They're favoring their customers. They'll take inventory from anyone. And so, as you've been discussing previously, in these businesses that are having trouble, Amazon is very diversified in its supply chain. It has its own products that it sells, its own branded products. It has it serves as a retailer itself. It'll buy the inventory wholesale and sell it. But more than half of the products sold on Amazon come from independent merchants who put their products on that site. And so that depth, it's more than 1 million merchants. That depth of inventory coming from so many different places really gives them an advantage, because the difference on Amazon is, rather than looking at an empty store shelf, in a store, on Amazon, if you're looking for something, even if you're not finding precisely what you want, or even if it's not from Amazon, they may have an alternative source for it, or just an alternative product that still suits your needs. So it's where this abundant inventory is really going to come into play.
So they've got the inventory in, now they need to get it to you. Can they do that?
That's going to be the ultimate test this holiday season, and that's where, if Amazon breaks down, that's where it's going to be. They're facing a labor crunch. They've had to offer signing bonuses of up to $3,000 in some warehouses just to get people in the door to pack boxes. Their delivery operation, which is made up of these small businesses that operate the Amazon delivery vans, they have they're all struggling to hire drivers and keep drivers on the road. So that's where Amazon's ultimate test is going to be: kind of get it to your house in time.
Spencer Soper. It's a great read. Go and urge everyone to go and read it online or on the terminal. We thank you. Wishing you a very happy Thanksgiving. Meanwhile, coming up, we'll talk to Zoom CFO Kelly Steckelberg about the company's latest earnings report, as well as the future of work. That's next. This is Bloomberg.
Extra $1 trillion in spending, not increase inflation?
By increasing the productive capacity of this country. And that's a very important thing that we, frankly, have not successfully done across most of my lifetime. I've been waiting for this legislation for months, since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future. Let me also point out to the fact that Part 2 of the President's agenda, what I like to call the big deal, but Part 2 of that, the Build Back Better Act, has even more that will help beat back inflation by lowering some of the costs that Americans feel most acutely: the cost of childcare, the cost of health care, the cost of housing, the cost of prescription drugs, bringing those down, while also making sure that we ease some of those labor market issues we have by making it easier for working parents to afford to go back to work.
So we've seen a steady rise in work-from-home stocks since last November, as more and more people adopt a hybrid, or actually completely remote rhythm. But as things start to settle down, we're seeing a slight slowdown in the work-from-home index, which includes companies such as Zoom, DocuSign, Workday. And Zoom, of course, after a fast rise in the early days of the pandemic when millions of people adopted its software to remotely attend classes, conduct business, to do their meetings, to school their kids. Well, now the company doesn't seem to be keeping up with that index. This as shares slumped on Tuesday after releasing slowing year-over-year growth in their third quarter earnings report. Let's digest this and talk about future growth with Zoom CFO Kelly Steckelberg to unpack all of this. Kelly, it's always hard when you see erosion in your share price, I'm sure, and I'm trying to steady the narrative to your investors right now. What are you telling investors in terms of the growth trajectory, which inevitably slows down as people perhaps come back to the office a little bit more?
Well, first of all, just to remind everybody that we reported earnings for Q3 of over $1 billion, which was 35% year-over-year growth, and gave outlook for the full year of over $4 billion, which is over 50% year-over-year growth. So we're really proud of everything we have accomplished. And we are excited about the future, especially about the future of hybrid work. You know, work is really transitioning. It's no longer a place. It's a space where people get their work done. And Zoom is really at the forefront of bringing teams together and keeping them connected and efficient. And we are really making this transition from being a killer meetings app to a communications platform that is comprised of not only our meetings feature that everybody knows and loves, but also Zoom Phone, which is our cloud PBX solution, Zoom Rooms, which is a conference room solution, which is really important and a key part of the strategy when you think forward to hybrid work. And then, of course, we have products like Zoom Events, which we just launched 90 days ago, as we look forward and consider that events are also going to be hybrid in the future.
I'm interested in, how you continue to build an ongoing conversation with your investor base, because to a large extent, perhaps they got too over-enthusiastic about where future growth could, and you just spelt out, you beat in many ways the third quarter earnings expectations. You're talking about this growth that is to 30% or 50%. However, did investors just expect too much, or was it also the fact that some of the M&A that you wanted, the inorganic growth, couldn't come off for this time round, but now you look for your own organic growth?
I think that we experienced growth last year that was completely unprecedented and had never been seen before. And the way that we talk about it internally to our teams and also to our investors is, we really can't control the stock price. What we can control is our execution. And we focus on delivering happiness to our customers and our employees every single day. We do that by innovating and creating the most reliable and intuitive products that support our customers' needs. And that's the best that we can do every single day.
Talk to us a little bit about contact center as a service, the Five9 deal that wasn't meant to be. There was hope, certainly from our own internal analysts and some analysts on the call, that you will still pursue that as an avenue of growth. And interested as to whether that is a merger story or whether that will be something that you look to enhance and build on internally, and how you execute.
Yeah, so we were certainly excited about the potential of the Five9 acquisition and think really highly of that team, and they remain a very important partner for us. However, Video Engagement Center is a product that we actually announced at Zoomtopia in November, and we expect it to be generally available in the first half of next year. And we're looking forward as a way to bring a really fully natively integrated product to our customer base, and think that it absolutely will be a core part of our platform moving forwards.
I'm interested as you look towards looking at conferences, looking at new and different ways that you continue to spell growth. What is it that most excites you going into 2022? What do you think is going to outperform where people are currently factoring in?
I think Zoom Events is going to be a really key important of conferences, as you say, as we're all excited to be back together in person. However, companies have seen just this tremendous efficiency and reach that they've gained by having virtual events. And so Zoom Events is going to be able to bring those two together and support them. So that's really exciting. And then also, I'm just going to circle back to Zoom Rooms. The conference room strategy in terms of how companies are going to be able to bring their teams back together in an inclusive way, the conference room is going to be front and center to that. So we have features like Smart Gallery, which recreate this experience where you can see everybody's face on the screen, even when there are many people in a room together. and things like companion mode, which allow you to interact with the meeting with things like chat and polling. So recreating the benefits that we've had all working remotely when we go back to a hybrid experience.
Zoom CFO Kelly Steckelberg, wish we had more time. Thank you for spending some with us. We wish you very happy holidays. Meanwhile, coming up, Elizabeth Holmes taking a stand. We'll talk about the latest in Theranos trial as we learn more about the former CEO in her own words. That's next, and this is Bloomberg.
The common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector. In Scotland, around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
On the supply chain, are you starting to see things improve? And if you are, where specifically, sir?
Well, this year we have been mostly affected by the semiconductor situation, and we believe that the quarter three was the quarter that was most affected.
The trial of Elizabeth Holmes, it continues, and now featuring Holmes herself. Now, the founder of the failed blood testing startup Theranos, once hailed as the next Steve Jobs, is accused of multiple counts of conspiracy and fraud and faces up to 20 years in jail. And as we are now finally hearing from the former CEO herself, let's bring in Bloomberg's own Joel Rosenblatt, who brings us up to speed with it all. And Joel, I mean, you've been in the courtroom since the trial very much started. This is almost coming to a climax to a certain extent. How interesting was it hearing her, you know, take the stand for her own defense?
Well, this was the big question, whether or not she was going to take the stand. And when her attorney called her, it was a big surprise. It came late on a Friday afternoon, and she only spoke for an hour, and nobody was ready for it. So it was a big deal. It was a big deal, very exciting for everybody, especially everyone who's been spending, 2.5 months in that courtroom waiting to see if she would do that.
How did she present herself? Of course, this ends up becoming somewhat of a blame game between her and Sunny Balwani. Of course, many realizing they had an intimate relationship as well as a business relationship. But what tone did it take?
She comes across as very relaxed, and she started off nervous. When she took off her mask, she looked nervous, but she quickly settled in. Gone is the black kind of turtleneck and kind of Steve Jobs costume that people like to make fun of. She's wearing conservative colors with a blazer, and she comes across as a chief executive, not a flashy Silicon Valley leader. In this case, almost more lawyerly, just very calmly answering questions, leading questions often by her lawyer. And she's presenting herself to the jury and to the world as somebody who was in charge, who was flying very high and not aware of all the details that might have led to the charges that she faces. Just not aware of all the details that led to the criminal charges that she's fighting now.
Okay, so sort of almost claiming naivety or too much busyness, really, to have a grapple on the finer details that end up becoming so important. The devil will be in the detail that she perhaps didn't grasp, and that will be in also exposed in the cross-examination, I imagine.
Well, that's right. It's in fact, while I say that she's kind of not aware of the details, that's mostly true. She did at one point admit to a problem. I mean, she can't just, on her testimony, just ignore the charges. She does have to address them. And at one point, she did admit that she did something wrong, that she wishes she had done it differently, which is to kind of lift the logos of pharmaceutical companies onto reports that she used to get, that she said were endorsements of her technology in order to get investments. So she's walking a fine line, but as you point out, the real test here is the cross-examination. That's going to be the real test for her. What she's doing right now is something she's familiar with. She's pitching her company. As I said, addressing some of the charges. The real test for her will be on the cross-examination, which is the moment that we're all really waiting for. You alluded to it earlier. It's not clear yet how much she's going to blame her former boyfriend and the Theranos former president, Sunny Balwani.
Of course, this is something of deep interest to Silicon Valley, but how global does this go?
I'll tell you, it goes across the globe, or at least certainly to Europe and beyond, because, well, first of all, you have reporters from really papers across Europe who are interested in it. I think it speaks to, the reason it's so interesting is because, a trial is not a debate. It's a narrative, it's theater. And the question here is how far can you lie in order to get what you want? And I think that's just a universal and global question that people want to know the answer to in this scenario and in this case.
Well, thank you for bringing us some of that theater, Joel Rosenblatt. We thank you. All important cross-examination coming up Monday, Tuesday. Meanwhile, coming up, we use blockchain to help fight natural disasters and improve first responder coordination. We're going to be talking to Ava Labs President John Wu on how his company is partnering with Deloitte to use the crypto tech to assist local and state federal responders.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Up front, when your shares are down 20%, it's got to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is Bloomberg Technology. I'm Caroline Hyde. Let's get back to the financial markets. Bloomberg's Ed Ludlow, keeping an eye on, well, all things crypto today, Ed.
Yeah, I mean, cryptocurrencies broadly have been under selling pressure for a few days, right? There's been a lot of chatter out there about growing regulatory risks. There's a fantastic story on the Bloomberg about, chartists basically looking to the technicals to try and find direction. You can see we're softer across the board as we spill into Thursday's session. Bitcoin lower, hovering around 57,000. I wanted to zero in on Zcash, though. I've not really tracked this token in particular, but it had an astonishing day Wednesday, the best performing cryptocurrency of those that Bloomberg tracks. And look at its performance year to date. It's kind of gone under the radar. We don't talk about it as much with its sort of modest $260 per token value. We can see it has performed well year to date, not quite at the highs that it was at in May. And it's interesting because it's very similar to Bitcoin, right? It has a limited supply, 21 million tokens. It's basically designed with privacy in mind. But there was news on November 19th that the developers is going to move from a cryptocurrency to a proof of stake rather than proof of work. I'll give myself some homework. I don't really know the full extent of what that means. I'll go away and find out. But there's a lot of chatter out there about this kind of being supportive of this particular coin. I also really want to briefly touch on Coinbase. There's always so many headlines about Coinbase, right? All kinds of stuff. You see, we're actually softer by 1.5% on Wednesday. There was some M&A news. There was news that kind of key Democrats are taking interest in Coinbase. They're asking difficult questions, writing letters to executive. Here's the one I'm looking at. Adidas, or Adidas to some people, tweeting, saying its Originals brand, Adidas Originals, has partnered with Coinbase. There's a tweet. But they also say probably nothing. And Coinbase replies, handshake emoji. So Bloomberg News has asked each of these respective companies to comment and explain what they're talking about. They haven't replied, but I'm sure this is something we'll find out more about. This is where we've got to in the world of cryptocurrencies and traditional business. Well,
it's definitely Adidas, though. Let's face it.
It is definitely Adidas, yeah.
Well, of course, Nike been looking into all things NFTs as well. Ed Ludlow, we thank you so much. Meanwhile, Kathy Wood has chimed in and says China is not uninvestable. The ARK investment founder and CIO exited most of her positions in Chinese stocks earlier this year, but says she sees a bit of an opening and she's waiting till the valuation dust settles. Spoke in a Bloomberg Intelligence webinar with Bloomberg analyst Rebecca Sin.
One of the reasons we built up our position in China in 2020 was because we saw China's response to the coronavirus crisis was much more responsible from a policy point of view, both fiscal policy and monetary policy, than many other countries around the world. And we thought, okay, maybe China is going to become the new Germany or Switzerland, known for its monetary discipline and fiscal discipline. But what happened in November of that year was somewhat startling. The episode with Jack Ma, and watching how he and many other executives who had created incredibly rapidly growing and exciting companies, they basically were told, and maybe there was some reason for it, but you're not welcome there anymore. You go off and do some charitable work or whatever the message was. And so that's what they're doing. We became concerned about that. While that kind of rhetoric and activity is taking place, so you're right, we pulled away very early, entirely out of our flagship, not out of all of our specialized portfolios, because in autonomous technology, for example, JD Logistics, JD.com, they have low margins, very friendly from a capitalistic point of view, and they're helping to push new goods and services into tier 3 and tier 4 cities, which is great. But there was so much uncertainty created by one regulatory crackdown after another, and after we didn't know where it was going to stop. Now we're seeing a little bit of an opening up. Even with the online education, we see, okay, well, you can't tutor children after school, but you can tutor professionals. And so now there's a little bit more give there. But we think the valuation of the Chinese market has been hurt significantly by this, and that the way the Chinese market will have to grow and stocks will have to grow is if the underlying companies themselves grow.
Bloomberg intelligence analyst Rebecca Sin there, speaking with ARC's Cathy Wood around all things about China. Now, remember, Cathy Wood, of course, a big supporter of blockchain technology, of certain exposure to crypto, and blockchain was developed for use in, as well, decentralized currencies. It's not just, though, crypto that benefits, or indeed speculation that benefits. Ava Lab has partnered with Deloitte to use open source blockchain technology to build software that will empower, in fact, first responders to stay connected, to streamline response to natural disasters and emergency situations. I want to bring in the president of Ava Labs, John Wu, who's our weekly cryptocurrent segment. And I mean, for once here, John, we're able to really talk about the practical use case of the underlying technology that is the blockchain, because in many ways it's become our favorite thing to talk about in terms of speculative assets, but we're all waiting for a DApp to work, or indeed some sort of practical use case, and you got one.
Caroline, thank you for having me. Good to see you again. And yes, this is a big moment. The use cases you have seen up to now primarily have been crypto native use cases, whether it's decentralized finance or meme coins, as we talked about earlier. But this is one of the first times where a Fortune 500 type company or a Big Four consulting firm has decided to build a solution, the close-as-you-go solution in this case, for their end customers, in this case, government agencies. This is a very big deal because Deloitte has estimated that they can save the government 50 to 80% of the all-in costs. And what it means for the actual end user is that poor victims in a disaster zone are able to get their grants literally days or maybe weeks, as opposed to currently where they get it months and sometimes half a year. This is a huge deal. And if Deloitte has trust in a blockchain like Avalanche for security and have better workflow automation, data management, and collaboration in the thousands of parties that's required here, that is basically the beginning of a big trend, and utility and adoption is really happening now on public blockchains.
In many ways, the way in which you sort of raise the profile of Avalanche vis-a-vis the likes of Ethereum blockchain and the like is smart contract-enabled application, but that much faster, that much low cost. It's interesting you also raise the focus of eco-friendly, and I want to understand how you're presenting yourself as eco-friendly at the moment.
Generally, when people think blockchains are energy consuming giants, it's relating to proof of work. And I think Ed earlier talked about proof of work versus proof of stake. Those are usually related to, right now, Bitcoin and Ethereum. Most of the new blockchain companies are proof of stake. It's more software-based, less hardware. And in Ava Labs or Avalanche, the blockchain's case, basically, we had an outside consultant do work, and the energy that is used up is no different from 12 US households a year. So it was minimal, relatively speaking. And on top of that, Ava Labs has bought credits in the market in order to offset even little bit of energy that we end up leaving in terms of carbon footprint.
Okay, interesting. Let's talk about your token. Is it AVAX, how you say it? It's been doing very well. And of course, this Deloitte deal helps it push up to sort of record prices. Does that matter to you? How much is that important in terms of bringing more people into the ecosystem, wanting to contribute, wanting to be part of it, and ensure that it continues to grow?
That is everything. It's about adoption. It's about utility. And I think Ed was talking about it in the earlier segment where the entire space has sold off because of fear of regulation. But the bigger story is not just the sell-off in the entire asset class. If you look underneath the hood, there's been more dispersion in the last few months than ever before in these individual tokens. The tokens and the companies and the projects are actually showing real utility, usage, either through individual adoption or in case of enterprises like we're talking about with Deloitte, transactions on the chain. Those are the ones that are actually doing better. Even with a down market, those companies or those projects have actually had increasing value in their tokens. So I am fortunate enough to sit in the seat where I talk to entrepreneurs, developers, investors, and users. I get a firsthand view to where the usage is coming from. And I see the correlation between usage and prices in these coins.
Let's just go longer term and where Ava Labs wants to go. Avalanche in particular. You know, it's all about speed, velocity, to finalize transactions. You're looking at DeFi now, you want to look at sort of the old school world of finance longer term. Paint the picture of what Ava Labs does or is in 5 years' time.
Well, in 5 years' time, Ava Labs, who's the team behind Avalanche, is going to be one of the big players in the space. It is probably the fastest. I think actually it is the fastest, no doubt, based on finality blockchain out there. And in terms of growth on the chain, it's the fastest in terms of usage, number of wallets, as well as transactions, as well as value on the chain. Where we will be in 5 years is ushering this movement from just crypto native usage to more Deloitte-like situations where traditional enterprises are now going to use public blockchains because it's better for collaborating, better for instantaneous transfer of assets, better for information sharing, and save companies even more money. This is like software eating the world to the next level.
John Wu, Ava Labs President, we thank you for your time. Wishing you a happy holiday. Meanwhile, coming up, we're about to enter the biggest shopping season of the year, talking about holidays. We'll talk about what to expect with my next guest, who just became one of the country's richest self-made women, thanks to her work in the world of retail and e-commerce. This is Bloomberg.
Get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point, when the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
Do you think competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever. But nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market, and this market has 3 very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the U.S., New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one directional traffic from the U.S. to the U.K., and now it's open, of course, to U.K. nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
Now, parents are busy. I promise I understand that. And we still have a responsibility to make sure that the default experience is as safe as possible. But we think that empowering parents is an important part of the solution. And you're going to be hearing us talk a lot more about not only parental controls, but safety for young people online more broadly. And I'm going to be talking about these issues with Congress relatively soon.
head of Instagram there, speaking about his upcoming appearance before Congress. Adam Mosseri has agreed to testify before a Senate panel early next month. It's part of a series of hearings into the effects of social media on children. Meta announced in September it would pause plans to create Instagram for kids, following a series of reports from the Wall Street Journal outlining the app's impact on young users. Cannibalization in some way? What does LTK bring to the table there?
So while this industry has been pioneered over the last 10 years, it's actually quite robust. And so when you think of the social media platforms, they're really part of the larger ecosystem, and they're a really important part of that ecosystem. And so they're a complement to a creator's business in that they give them new formats and new ways to attract, customers, followers, shoppers. And so with each, over the last 10 years, we've seen a new platform usually about every 2 years. So when we started, it was with blogs and Facebook and Twitter, and then of course expanded into Instagram, and then Snap, and now TikTok, Clubhouse, the LTK shops. And so we continue to see these new platforms. They tend to attract different generations of creators and different types of creators. And so they're really a propellant in this industry because obviously you need a way to connect with people. And then some of those people want to go shopping. And when they do, our creators bring them back to the LTK storefronts, and that's where the business happens.
Okay, interesting. So if I was on an app, a social media app, and I clicked through and I was watching, but it wasn't LTK's, I would somehow be navigated back to yours when I followed through the purchasing process.
You could. So we empower really shopping everywhere online for our creators, wherever they're creating content. And so we think of it as, on platform and off platform transactions. And so a creator can use social media platforms in whatever way they're engineered. So they can decide to link directly to a retailer site. They can link back to their LTK creator shop. And that shop hosts a number of links and then their entire shopping experience. But really anywhere that you're engaging with creators, they can actually bring shopping to you and make that turnkey and efficient.
Of course, you're across about 100 countries. You've got a presence in the UK, Brazil, France, Germany, Australia, China, South Korea. I mean, what a bird's eye perspective. I know as someone originally British that they're very forward in terms of online experiences and online shopping. How do we compare? How does the US compare to the likes of South Korea? Where are you really seeing significant growth?
Well, creator is a worldwide trend. We just did a study where we found that even just domestically in the US, about 2/3 of people were inspired by their purchases by seeing creators talk about or feature those products online. And you're seeing that on a global level. Certainly, we've seen that across Asia, across Europe, across Australia. And really it comes down to the way that we as society are engaging with people today. Ultimately, we're spending hours and hours on our phone every day. We're in aggregated content channels. Those channels are filled with content that our clients create. And so what's interesting about this industry is you've actually chosen to follow the people that you're seeing in your feed. And you might identify with them. For example, I'm a creator myself. My followers might identify with me because of where I live, or that I'm a professional, or that I'm a mother, or that I have pale skin or red hair, or there's something about me that they identify with, and I'm able to help them guide their purchases. And so we're seeing that all around the world and cross-category, cross-vertical, cross-platform.
We've got about a minute left or so, Amber, but how do you ensure within that authenticity, safety as well for the people that follow you, and the way in which you sort of absorb social media and want it to only be a positive thing?
Very intentionally. So the LTK platform is a place where our creators come to create their digital storefronts. And that's really a really focused experience that's 100% dedicated to creator guided shopping. This is where our creators, they hold no inventory, they ship no boxes, they do no customer care, but they're making everything about their lives shoppable, whether it's the wagon that they use to take their kids around the neighborhood, or the dress they wore on TV today, or the makeup that they like to use, or the night cream. Every single thing that they're consuming, they're making shoppable. And we've engineered that platform in a way where it's not a social platform, it's a shopping platform. And so when you show up there, the only thing that you can do is shop. And we've seen now that about 8 million people every month are coming there to shop. And actually in the last 12 months, they've purchased $3 billion worth of products from our creators. And one of the most interesting things that I've seen lately is actually the rise of direct to consumer. About 20% of that $3 billion went straight to direct to consumer brands over the last 12 months, which is really exciting for us as we think about that different type of creator.
Amber, great to have some time with you. Thank you for spending it ahead of the holidays. Amber Vensbox, co-founder of LTK. Coming up, theaters still waiting for the first must-see film of the pandemic era. We'll break down the numbers and what's Hollywood hoping you'll go and watch this holiday season. That's next. This is Bloomberg. talk a little bit about Hollywood now and its big holiday push as people slowly return to the theaters. Let's head to LA, where I'm joined by Bloomberg's Brian Eckhouse with more on what we can expect to see, not only on the big screen, but streaming at home as well. So if I was going to go out, what am I watching in the big screen right now?
Well, starting tomorrow, you can watch Disney's Encanto, a family animated film. House of Gucci comes out also tomorrow, and returning champions, Ghostbusters Afterlife and Eternals came out early November, and it's still in theaters now.
Always good to talk about House of Gucci when I think the whole film is based on a book written by one of our own journalists, so I'm desperate to go and see that. In terms of streaming, I mean, I'm seeing and hearing so much buzz surrounding Will Smith and King Richard. How is that going in terms of, because they've got a dual sort of release, right?
It does have dual release. It's really well reviewed by critics. It's in theaters, as you said. It's also on HBO Max. And we've seen so far this year that films that have that simultaneous release tend to see muted box offices. It did okay this weekend, but it was nowhere near the debut of Ghostbusters, which had only a run in cinemas.
I see. And there is the new GQ, what is it, Sexiest Man in 2021. I don't know why I know these things. Meanwhile, talk to us about some of the documentaries. I've been recently trying to look at all the best documentaries in Netflix. I keep on finding various lists of them. There's going to be a couple more, right, to be consuming?
There are. Tomorrow is tomorrow, Thursday, is the debut of the new Beatles documentary. It's 3 episodes over 3 nights. That's been years in the making. Peter Jackson, the celebrated director, is behind it, and it gives viewers a chance to sort of revisit the last few days of the Beatles. The idea has been that things were fraught between them toward the end. Apparently, this documentary shows that things may have been a little lighter. There have been more, perhaps, friendliness and laughter than we may have thought from the original documentary that came out after they broke up.
So, what are you going to be watching, Brian?
I'll be watching the Disney Plus version of the Beatles tomorrow night.
Okay. I'll try and tune into it too, if I can put the kids to bed on time. Brian Eckhouse, great to have some time with you. Thank you for leading us all up to, well, a busy time of consuming, whether you're watching the football, whether you're dining out on food, whether you're watching some of these new lineups as it comes to the world of streaming and the theaters. Meanwhile, do remember, Bloomberg Technology will be taking a couple of days off. Go, celebrate, enjoy your Thanksgiving here in the United States. But do make sure you tune in on Monday when we'll be bringing you a special extra episode of Bloomberg Studio 1.0 with Alphabet CEO Sundar Pichai. You do not want to miss it. Meanwhile, from New York, wishing you some very happy turkey feasting and indeed a bit of a relax outside of the markets, unless, of course, you're trading crypto, which never sleeps. This is Caroline Hyde in New York. This is Bloomberg.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
How does an extra $1 trillion in spending not increase inflation?
by increasing the productive capacity of this country. And that's a very important thing that we, frankly, have not successfully done across most of my lifetime. You know, I've been waiting for this legislation for months since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future. Let me also point out to the fact that Part 2 of the President's agenda, what I like to call the big deal, but Part 2 of that, the Build Back Better Act, has even more that will help beat back inflation by lowering some of the costs that Americans feel most acutely, the cost of childcare, the cost of healthcare, the cost of housing, the cost of prescription drugs, bringing those down while also making sure that we ease some of those labor market issues we have by making it easier for working parents to afford to go back to work.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says, I look like I'm 101.
I noticed that.
Do you think I need a lift? Is it time
What
that
did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I had no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Thank you.